Welcome to another one of our videos, and today we're discussing retirement annuities in South Africa and a full breakdown thereof. Now, retirement annuities are quite popular investments in South Africa for saving for retirement to provide you with retirement income. But before we get into that, if you subscribe to our channel and we hit 1,500 subscribers, you stand a chance to win this book. So make sure to like, subscribe, and share this video with friends and family. Now, first things first is, what is a retirement annuity? So a retirement annuity is a long-term investment vehicle that is used to provide you with income post-retirement. And it's also strictly governed by the Pension Funds Act to ensure that it is safely invested for you as the investor who's placing funds within the investment vehicle. A question I get a lot is, who should invest in a retirement annuity? Now, number one, entrepreneurs who maybe don't have formal employment, where they don't have a pension or a provident fund, can use a retirement annuity to help them save for retirement, as well as people who are working in the formal sector, either private or government companies. You can supplement your retirement with a retirement annuity to help you achieve your goals. Business owners also looking for tax-efficient ways to reduce their tax liability and help them save for retirement. All these people can consider looking into a retirement annuity to help them reach the goal that they're looking out for. Now, some of the big benefits of a retirement annuity is the tax benefits. So you get tax deductions on your contributions, and how they specifically work is SARS sets out rules to say that you're allowed to save 27.5% of your gross annual income up to a maximum of 350,000 Rand. If you contribute that maximum limit in that year, you can claim it as a tax deduction and you'll get a refund from SARS. Even if you save more than the 27.5% in that tax year, you won't forfeit the benefit, but it will carry over to the next year. Also, you pay absolutely no tax on the growth. So there's no CGT, there's no dividends, no interest tax on saving in a retirement annuity. So you're deferring all of that tax only for the day when you start to draw an income from your retirement annuity. So a fantastic vehicle to use from a tax perspective. Now, one of the things that becomes somewhat of a restriction on retirement annuities is what we know as Regulation 28. Now, Reg 28 says that you're only allowed to invest the funds in certain asset classes, and you've got maximum caps at which you're allowed to invest in. For example, you're only allowed to invest 75% within equities, or better known as stocks, 30% in offshore assets, which include Africa, 25% in property markets, and 10% in hedge funds or private equity. So given that, you're not going to be able to structure something super aggressive due to Regulation 28. But please do bear in mind that this is there to protect you and not play games with your retirement money. Another one is accessibility. So everyone wants to understand, how does accessibility work on a retirement annuity? And it's broken down into two categories. The first one is, how can you access your retirement fund prior to the age of 55? Because you cannot retire earlier than 55. It has to be 55 or onwards, you can go into formal retirement. So prior to 55, you're allowed to access your retirement funds if the fund value is less than 15,000 Rand. Or if, God forbid, you are in an accident or severely ill and you're disabled and you're no longer able to work, you may then access your retirement funding. The second aspect is 55 and older is when we start going into formal retirement. And a couple of things here are going to happen. Firstly, you're allowed to access 1/3 of your retirement savings. The first 550,000 is tax-free. Everything after that will be taxed on a sliding scale. The other 2/3 you have to then reinvest to purchase either a life or a living annuity, and that will provide you with the income that you have saved up for all these years in your older age. Tax. Everybody loves tax. So let's delve into tax and how tax affects your retirement annuity. So if you do a lump sum withdrawal, the one we've previously mentioned, 55 and older, so your first 550,000 is tax-free. From 550 to 770,000, you're going to be paying 18% tax. From 770 to 1,155,000, you're paying 27%. And everything over and above 1,155,000, you're going to be paying 36% tax. Now, when you formally go into retirement, remember we've deferred all of the tax whilst saving leading up to retirement. So when you convert your savings and you start earning an income, your income is going to be taxed as what we know as pay-as-you-earn tax. Just remember that when you're looking at your tax in retirement, you need to consider your living or your life annuity, as well as any other sources of income, maybe rental income, dividends from investments that you have with a bank, or any other sources need to be declared to make sure you're taxed accordingly. Okay, down to fees and costs. Now there's 4 applicable fees that run on an investment when we're looking at retirement annuities. Number 1 is the administration fee. The administration fee is the platform that's going to charge you a fee to house your investments on your behalf. They're going to be sending you the statements, and they'll be making sure that your money is reported on correctly on a quarterly basis. Then you've got fund management fees. Your fund management fees are the asset portfolio managers that are busy managing the billions or hundreds of millions of rands to help you generate returns, and they take a fee for doing that. The third fee you also get is a financial advisor fee. So if you work with a financial advisor who helps you, guides you, and structures your investments for you, you'll either pay them an upfront fee or an ongoing or a combination of both. And then the last one, you don't see them on all RAs, but we've got what we call performance fees. So if the performance fee works out to, let's say the fund manager says the target is 10% return per annum, and they achieve 11%, they're then allowed to, based on the performance fee, share that 1% appropriately with you, and that will all be detailed on the investment sheet when you look through that and go through all the fees. One very important thing, and these are the 2 determining factors that give you growth at the end of the day. Make sure that your investment portfolio is set up correctly, you're in the right portfolio, and number 2, you're not paying exorbitant fees, and you'll see your money grow. Another interesting one is the 2-pot system. This came into effect the 1st of September 2024. In essence, your fund will be broken down into 3 different components. Firstly, you'll have your savings component, your retirement component, and then your vested component. Let's break them down briefly. The savings component is all of your contributions going in after the 1st of September 2024. So the savings component is 1/3 of your contributions will go to your savings component. That's all of your contributions from the 1st of September 2024 onwards. Then 2/3 will be going to your retirement component, and your vested component is all of your money that you've saved up prior to the 1st of September 2024. Now let's look at some of the pros and the cons of a retirement annuity. A retirement annuity, number 1, offers massive tax benefits. As you can see, up to 27.5% per annum that you can get as a tax deduction by your contributions. Number 2, it forces you to save for the long term. Many times we don't think about the future, and a retirement annuity helps you prompt those thoughts and consider investing for the long term for when you're no longer able to work. Number 3, it helps you diversify your investments, looking at different asset classes, and with the help of Regulation 28, you'll be able to safeguard your money and make sure that your money is growing steadily and not placed at unnecessary risk. And lastly, it's good for freelancers and self-employed individuals. That can help you, gives you that opportunity to save for retirement. Now, some of the cons of a retirement annuity is you have no access to these funds before the age of 55. So make sure that you diversify your investment portfolio and you use different product structures to achieve these goals. A second negative, in some people's view, is again Regulation 28, where you're not getting massive returns because you can't invest too aggressively. But like I mentioned earlier, remember this is there to safeguard you and safeguard your money for the long term. The third one is be very careful. With some companies, the fees are extremely high. So you need to do comparisons to make sure that the fees that you're paying on your retirement annuity are not exorbitant, thus eating into your growth. And then the last one is your annuity purchase at retirement doesn't offer you all that much flexibility. You've only got the option between a life or a living annuity, and the maximum withdrawals that we've already mentioned, subject to tax. Well, there you have it. Thanks for sticking around. Make sure to like, subscribe, and comment on this video. I'd love to hear your thoughts. Let me know, do you like a retirement annuity? Do you have one? And what's your thoughts around them? Until next time, cheers.